right, let's get right into it. Today, we're tackling a huge question for anyone paying attention to the AI space. Could a memory chip maker, not one of the flashy GPU designers, actually be the single best AI stock to own for 2026? We're going to break down the entire bull case for Micron Technology, piece by piece. Welcome to Value Vest Daily. Our job is to help you connect the dots between the headlines and the hard numbers. And today, we've got a story that's been kind of hiding in plain sight: the absolutely essential role that memory plays in this whole AI revolution. And wow, that quote just hits the nail on the head, doesn't it? While everyone's eyes are glued to the usual suspects, Wall Street analysts are starting to point to a totally different kind of giant, one that's supplying a critical resource that the entire AI industry can't live without. And the market has definitely started to wake up. Just look at this number, a staggering 260% surge in its stock price over the last year alone. I mean, to put that in perspective, that's a run that crushes many of the high-flying AI names you hear about every single day. This is not some small bump. It's a massive move that makes you stop and ask, okay, what is the market seeing that I'm not? And listen, this isn't just Wall Street hype or some fleeting trend. That incredible stock performance, it's being fueled by real, hardcore business results. The company just dropped a bombshell, a massive 57% year-over-year revenue explosion in its first quarter. This right here, this is the engine behind all that momentum. It's a loud and clear signal that demand for their tech is hitting a serious turning point. So, here's the million-dollar question, right? This is what this whole deep dive is about. We've seen the hype, we've seen the monster growth. Now we have to figure out if Micron is a genuine long-term value opportunity or if we're just staring at the peak of another AI-fueled bubble. And of course, before we dig in, our standard disclaimer: this is not financial advice, it's not tax advice. We're doing this for educational purposes only. You have to do your own research before making any investment decisions. Okay, let's jump in. Here's our game plan. First, we're going to frame Micron's role in this AI gold rush. Then we'll get into the critical memory bottleneck that puts them in such a powerful position. After that, we'll dive into the explosive financials, figure out if the stock is still a good deal, and finally, we'll give you our verdict. So, let's kick things off. You know, everyone's out there looking for the next Nvidia, but maybe the smarter question is this: what does Nvidia and every other AI company out there absolutely, desperately need to even exist? And that, my friends, leads us to the classic picks and shovels strategy. Now, this whole picks and shovels idea is absolutely key to understanding the bull case for Micron. Think about it like the gold rush. You could bet on one guy finding gold, which is super risky. Or you could be the one selling the picks and shovels to every single person who showed up. You're guaranteed to make money no matter who strikes it rich. In today's AI gold rush, Nvidia is like the star miner. But Micron is selling the essential shovels, that high-performance memory that every single one of those AI prospectors needs. It's a play on the entire industry's infrastructure, not just one winner. Let's move on, because this is where the story gets really, really interesting. It's not just that Micron sells memory. It's that they sell a very specific, super advanced type of memory that has become one of the biggest bottlenecks in the entire AI industry. Seriously, understanding this bottleneck is the whole game.
And that bottleneck has a name: high bandwidth memory, or HBM. Think of it this way. If an Nvidia GPU is the genius brain, HBM is its super fast, short-term memory. It's what allows that brain to access and process insane amounts of data all at once, in real time. You literally cannot train the big AI models of today without it. It's not some optional upgrade, it's a non-negotiable part of the whole system. And that reality creates this incredible situation in the market. The demand for HBM is just so intense that the entire world's supply is already sold out, not just for this year, but all the way through 2026. This is a severe supply crunch. And you know what happens then, right? Basic economics. Prices are getting jacked up by 20, even 30%. You've got the biggest companies on the planet, Google, Amazon, Microsoft, all fighting for every single chip they can get. And right in the middle of all this chaos, Micron is just executing, ramping up its next-gen HBM production, and from what we hear, they're doing it faster than their competition. So it's really no wonder that you see headlines like this, calling it the potential biggest surprise of 2026. I mean, when you have unstoppable demand, not enough supply, and prices going through the roof, the profit potential for a company like Micron just becomes absolutely massive. So that's the story. Now let's get to the proof. Let's look at the hard numbers. How is this amazing market position actually showing up on the bottom line? We're about to analyze the truly explosive results from their latest quarter. Just look at the story this one chart tells.
In 1 year, one single year, Micron's quarterly revenue shot up from about $8.7 billion to over $13.6 billion. That's a 57% jump year over year. For a company this big, that is just a phenomenal leap. This isn't slow, boring growth. This is the kind of rocket ship acceleration that investors are always hunting for. And if we break it down, we can see exactly where that money is coming from. A full 80% of it is from their DRAM business. And this is so important because DRAM is where the really profitable, high-demand stuff like HBM lives. So they're not just selling more chips, they are selling way more of their most profitable chips. They have the perfect product at the perfect time. Okay, this table basically tells the entire financial story. Let's walk through it. We saw the 57% revenue growth, but check this out. Their gross margin has literally doubled from 28% to 57%. Think about that. For every dollar of stuff they sell, they're now keeping twice as much profit as they did a year ago. That's what lights a fire under the bottom line. It's why their earnings per share exploded by 167%. And then there's the cash. A record $5.2 billion in free cash flow in 1 quarter. This isn't just paper profit, it's a fire hose of actual cash flooding into the company. And here's the kicker. This isn't just a one-off good quarter. The market is always looking ahead. And Wall Street analysts, they're taking these numbers and projecting them out. The consensus forecast right now is that for the full fiscal year 2026, Micron's earnings per share could grow by a mind-blowing 294%. The growth isn't just supposed to continue, it's expected to get even faster. Which brings us to the most important question of all. The growth is insane, we get it, but the stock is already up 260%. So is there any value left here, or are we just chasing a stock that's already had its run? Let's dig into the valuation. Now, this might be the most important slide of the entire presentation, because this is where the growth story smacks right into the stock price. Look at this. Based on those huge earnings estimates we just talked about, Micron is trading at a forward PE ratio of just 12.5. Now compare that to the darlings of AI. Nvidia is at 40, AMD is at 35. So get this, Micron is projected to grow its earnings almost 6 times faster than Nvidia next year, but its stock is trading at about a third of the price tag. This right here, this is the heart of the value argument. It's massive growth at a price that looks, well, kind of cheap. But of course, no investment is a sure thing, and we have to be honest about the risks. On one side, you've got these powerful arguments for buying: the low valuation, the monster growth, the surging cash flow. Plus, historically, these memory cycles tend to last 2 or 3 years, which suggests we might still be early. But you have to weigh that against the very real risks. The memory industry is famously cyclical. It goes through huge booms and busts. Geopolitical tensions could always throw a wrench in things. And there's always the risk the AI hype cools down a bit. These are things you absolutely have to consider. Okay, let's bring this all home. We've looked at the strategy, the tech, the numbers, the valuation. It's time to put it all together and give you our final verdict on Micron. So let's just recap the bull case with 4 key points. 1, it's the ultimate picks and shovels play on the entire AI revolution. 2, it has a killer position in the HBM market, which is the biggest bottleneck right now. 3, this is leading to absolutely explosive financial growth. And 4, even with all that, the stock still looks remarkably cheap compared to its peers. So here's our take. When you put together that powerful AI tailwind with rock-solid financials and a valuation that still looks like a bargain, Micron really does start to look like a high-conviction opportunity for investors who are hunting for growth but still want it at a reasonable price. But now, I want to hear from you. After seeing all this laid out, what's your gut feeling? Do you think Micron is a clear buy, a hold, or are the risks just too high and it's time to sell? Drop your thoughts in the comments below. Hey, if you got some value out of this deep dive, do us a huge favor and hit that subscribe button, give this a like, and share it with someone you think would find it interesting. It really is the best way to support what we do here at ValueVest Daily. And one last thing, we build this channel for you. So if there's a specific company or a high-risk, high-reward situation you want us to break down next, let us know in the comments. We read every single one. Thanks for watching.